Hi traders, welcome to our weekly top-down analysis. So stay tuned for trading setups with your entry price levels, take profit levels, and stop loss levels. So we are beginning with a step index for this episode, and as always, we begin from the weekly time frame by marking our key levels. We have a supply up there, and then down here we have a demand. So our bias is going to be bearish until I see that price is ready to break through this demand zone. Heading over to the daily time frame. Heading over to the daily time frame, we can see price is reacting from that supply. Now we have this break of structure which price formed here. So we have a break of structure, and then the other block which caused the break of structure from the daily time frame. It is that order block. Heading over to the 4 hours time frame. From the 4 hours, we are going to work with this our recent break of structure, which is that odd break of structure right there. So we have that break of structure, and then our order block. Our order block is that order block where price is reacting. It formed a bearish pin bar, and we are pushing down, and we have this low here. Heading over to the 1 hour. So from the 1 hour time frame, price is reacting from that order block, and we are pushing to the downside. Now, if you want to get into this trade, since it's already happening, let's try to see if we can get a break of structure. So we have a break of structure right there. We have a break of structure. And then the other block which caused the break of structure from the 1 hour time frame. It is that order block right there, and then our FVG. So our fair value gap, and then heading over to M30. M30, our order block will be at that level, and then fair value gap at that level. Heading over to our entry time frame, which is the M15. So from the M15, let's try to zoom in to see the price action that is happening. So from the M15, the break of structure is going to be at that level. So our break of structure will be right there. And then our order block from the M15 will be at that order block. And then our FVG will be right there where price has just stepped in and we are forming a 2 is our top. So for step index, it's going to be an instant execution because we have a break of structure and then price went back to go in and mitigate the order block and it's still going back. It's now mitigating my fair value gap. So for step index, it's going to be an instant execution. I'm going to take this trade now. So instant execution on step index, entry price, current market price with your stop loss slightly above the order block at 7772.5. Entry price, current market price, and then your take profit level. We are targeting this extreme low, which is at 7730.5. And always apply proper risk management. I'm taking this trade because I have this break of structure and then price just mitigated my order block and then went back in again to mitigate my FBG by forming a bearish engulfing. Therefore, I'm anticipating for price to keep pushing down until at 7730.5. It is always apply proper risk management. Heading over to volatility. Volatility 75 from the weekly time frame. We can see that price is reacting at that supply. And then we have a demand zone right there. Therefore, our bias from the weekly time frame is bearish. Therefore, we're going to be looking for selling opportunities until this demand zone. Heading over to the daily time frame. So from the daily time frame, we have that break of structure, which was the last break of structure to the upside before price stepped into that key level, which is the supply. And then we have this change of character to indicate this bullish trend is over. Now the sellers are trying to step in. We have a change of character or market shift. And then the order block, which caused this change of character, it is that order block. It is that order block. And then we have a swing low here. Heading over to the 4 hours time frame. From the 4 hours time frame, our break of structure will be at that level. And this change of character refining it in the 4 hours time frame, it's going to be at that level now. Change of character. And then the other block, which caused the change of character in the 4 hours time frame, will be at that level right there. Now, whenever a change of character happens, price has to go and mitigate the order block which caused the change of character here. Therefore, I'm anticipating that to happen for price to go and mitigate my order block and then get a push to the downside like that, because a change of character has already occurred, an indication that the sellers are trying to step in. However, this short bullish trend, we can still catch a trade until price gets to that order block. Therefore, analyzing this bullish trend, we have a break of structure. We can take a short buy, but the overall trend is bearish. This is just a correctional move to the upside before we start moving down, because a change of character is already occurred. So we have a break of structure. And then the order block which caused the break of structure, it is that order block where price has just stepped in and we are pushing to the upside. Heading over to the 1 hour. From the 1 hour time frame, we have this break of structure and price with the liquidity which are seated there, tapped into the order block, and we are pushing to the upside. We are pushing to the upside. Now we have this break of structure here. That break of structure, and then the order block which caused the break of structure, it is that order block from the 1 hour time frame. And then we also have this break of structure, which I'm seeing as the liquidity that price has to sweep to go and tap into my order block down there. So we have that break of structure. Moving over to the M30. From M30, our order block will now be at that level. That is our break of structure. And then we have these order blocks that price left behind as it was moving up. So all these order blocks now will become our liquidity, because the extreme order block, meaning the first order block that price created as it broke this structure, has not been mitigated. Therefore, all these order blocks that price is creating here, this is just inducement or liquidity according to my strategy, which is the SMC strategy I trade. I do not place entries at these order blocks as long as my extreme order block, which is down here, has not yet been mitigated. Therefore, I'm seeing all these order blocks as liquidity. Therefore, I'm going to mark all these order blocks as the liquidity that price has to sweep. To come and tap into my main order block. Heading over to the entry time frame, which is the M15. M15, adjusting to the M15, our order block will now be at that level. And the break of structure will now be at that level, and liquidity is present. Now I'm going ahead to give the coordinates for the buy limit on VIX 75. On VIX 75, stop loss slightly below the order block. Now you can go ahead and place a buy limit on volatility 75 with your entry price at 47619.41 entry price, and then stop loss slightly below the order block, which is at 46483.96, and our take profit, we are going to target this extreme level at 53014.01, and always apply proper risk management. Therefore, I'm placing this trade because it's aligning with my strategy. We have a recent break of structure unmitigated. We have all these unmitigated order blocks, meaning they are now forming liquidity because my main order block has not yet been mitigated. Therefore, I am anticipating for price to still come back to this order block, mitigate it, and then continue pushing up. So that is what I'm going to be positioning for this week on VIX 75 to see if it plays out. And then moving over to volatility 100 from the weekly time frame, marking my key levels, you can see that there is a supply. There is a supply at that level and price is just stepped in. Therefore, I'm going to be looking for selling opportunities to the downside. I'm going to be seeing if I have a change of character. Moving over to the daily time frame. From the daily time frame, we have that break of structure. That break of structure. And then there is an order block right there where price looks like it's just stepped in and we are pushing. Moving over to the 4 hours time frame. From the 4 hours time frame, we have that break of structure. And then price is reacting at this 4-hour order block. Moving over to the 1 hour time frame. From the 1 hour time frame, we have a break of structure right there. And then our order block is at this level. Price is still falling. It's still pushing down. Therefore, I'm going to look for a sell position because I can see price is pushing down and the overall bias is bearish. And then I'm going to see what happens at this order block, whether price will push up from here or to break through this support level and continue selling. Now, we have a recent break of structure here. We have a break of structure, and then the other block which caused the break of structure, it is that order block where price is currently reacting. Moving over to the M30. From the M30, the price action is clear. We have that break of structure. That break of structure, and then the order block which caused the break of structure. It is that order block. And then we also have our fair value gap. At that level, we have FVG. And then now all these break of structures that price has just formed here, this will now become our liquidity that price has to sweep to go and tap into our extreme order block or FVG. So we have a break of structure. That is where liquidity is seated according to my strategy. Whatever order blocks price creates, as long as it did not mitigate my extreme order block, then all those order blocks become now my liquidity. And then we also have this break of structure. We have that break of structure. Now the coordinates for the sell limit on volatility 100. There is already a support. All right. We can go ahead and place a sell limit on volatility 100 with our entry price at 689.24, stop loss at 717.68, take profit at this extreme low at 619.82, and always apply proper risk management. Therefore, I'm anticipating for price to sweep this liquidity take me into my FVG and then continue to the downside because the overall trend is bias. All right, traders, that's it for this episode. If you did find the episode helpful, consider subscribing to the channel, like the video, share it with your friends and family, those ones who are interested in trading, and have a profitable trading week. See you next week.